Hi and welcome to the channel. Today we are going to analyze Pepsico. First we'll find out the dividend score, and after that we'll check the valuation with the help of fast graphs. A massive market cap of $224 billion. The current stock price is 167.27 and they operate in the beverage industry. During the last 10 years they have performed almost exactly like the S&P 500, and this is with the dividends reinvested for both the S&P and Pepsico. Let's check some financial data. The average sales growth the past 5 years is actually almost 5%. That's a check mark. The earnings though is a bit weak, 5.2%, and the analyst expects the earnings to be 7.97%. The threshold is 8 here, so it's extremely close. The return on capital is high, 17.54%, so that's really strong. One of the most important metrics in my opinion. But the debt compared to the free cash flow they are generating is a bit high, 5.86 years. Now some yielding data. The dividend yield is 2.83%. That's a check mark. They are not buying back any shares, so that's an X. The payout ratio is creeping up there at 67%. This is still below the threshold at 70%, but they don't have that much room to grow their dividends. And here we can see the dividend growth rate is still okay at 7.39%. but it's not at double digits. But the growth years, oh boy, this is almost a dividend king. They have been growing this dividend for 49 years, so hooray Pepsico. And all in all, this makes up for a dividend score at 6 out of 10 points for Pepsico. A very popular consumer defensive company for dividend investors. Let's take a look at the valuation. Here we have Pepsico in fast graphs, and we have numbers and graphs for the last 15 years with some projection out in the future. The orange line is the earnings, and we can see that it's extremely predictable and growing, not at a very fast pace though. The earnings growth is about 5.5%, and during the same period for the S&P it was 7%. So you have a bit of a trade-off here for stability, but we can see the white line, which is the dividend, is also extremely reliable. And this is a company with a credit rating of A+, so they have their financials very secured. But let's take a look at the current price compared to the normal PE, which is quite high for a consumer defensive company. The normal PE is about 20 for this period, and we can see that basically the last 5 years Pepsico has been trading far above its normal PE, and right now at about almost 25. So if we project out to late 2024, we can only see an annual return of 2% at this valuation. Please hit the like button and also watch one of my latest videos where I reviewed a subscriber's portfolio. See you soon!